Good morning, everybody. Happy Friday. We'll get started here in about 7 minutes. Good morning. Good morning. We will be getting started here just shortly in about 3 minutes. Strange reaction on the report that came out. Kind of looks like it did a liquidity sweep to the upside. So I'm still looking for a V-shaped reversal. We'll talk about that in a few minutes. Yeah. Okay. So welcome. Happy Friday. And Let's get myself organized. There we go. Take a look over at our reports and things like that we have coming out. Kind of a light day on economic report. Okay. We'll get started here in about 2 minutes. All right. Hey, good morning, everybody. Happy Friday. Welcome to our live stream. We had kind of a strange reaction to the PCE report. Okay, so strange meaning it didn't have a big reaction like we normally see. So there's some things that may be outside the price chart that we need to consider. We'll look at some opportunities here. I'm currently short. Okay, I'm looking for prices to actually accelerate going back through this dead space to the downside. I'm expecting what we use as a V-shape reversal. And let me see if I can bring that up. Screenshot. So the pattern that we're working on right now, we're working on the XY leg, and the XY went a little above resistance. So this is what I'm anticipating. This will be the fourth move down on, let's just say, the 30 or 60-minute chart. You'll see that there is three legs to the down, three impulse waves, three correction. And now as we're going to make a correction to move back to the upside, we need to put in a reversal pattern. And often reversal patterns can be a V-shaped reversal, they could be head and shoulders, they can be a rounding bottoms, and so on, double bottoms, and so on. But the way that the market had the drop before, and then the basing over on the left-hand side, okay, I'm looking for this V-shaped reversal. So V-shaped reversal, that brings, if you look at the corner over here on the in Q, okay, that would bring prices back down below this dead space. Now this area down here is also a support, okay, tested twice, okay. So if it bases out here, we're looking at more of another, what we call as a dead space, that area where price just kind of goes back and forth, okay, which creates a picture where we can see where we would look for demand and supply. Now, demand zones are still fairly far away, okay? Very far away for demand on the higher time frames. So let's take a quick look at the um, S&P. S&P, we got a nice bounce off the 88.6 on the daily chart. We are in inside day on the equity indexes. Therefore, I needed a zone entry using the leg base group of candles. And you can see that there was one right there prior to us starting. Okay, about 66.89, 66.97 area. Okay, so zone entries only, no breakout trades. We also, on an inside day, we anticipate the gap fill. You can see the prior session's range was an impulse, and then we went into a correction. Okay, so we're still in that correction phase, and either we're going to put in a reversal pattern and move back up, okay, or we're going to look for the gap fill. Well, let me rephrase that. 85 to 90% of the time when price opens inside the prior session's range. Okay, that's why we mark the prior session's high and low. And when it's inside the prior session's range, inside day, zone entries only, we have 85, 90% of the time we will fill that 5 p.m. close or the gap area from the prior session's close. Okay, so we have a direction and where we're going to intend for price to come just after the market open. We'll look for that gap fill. Okay, now this move to the upside, as we look at that template for the V-shape reversal, we take this last measurement up, okay, and then we'll look for down below, we'll look for that 224, 2618, and 314 extension. Okay, there we go. And we'll kind of line that up. Where do we have a zone in that range? And we have two areas of interest, and that's going to be back down about that 6,600, right around our prep screen zone as well. So we have two techniques, forward-looking techniques, where we're looking for demand. We got a fair value gap inside of a demand zone. We got a potential V-shaped reversal as we start to put in the bottom. Okay, so where I'm looking to go long is demand way back down here. Okay, now you can see that we've had one impulse wave correction, impulse correction, impulse, either accumulation or and we did have correction. Okay, but now we have to put in a reversal pattern. Okay, and once we put in that reversal pattern, then we'll look for the trend back up. But reversal patterns can come in different shapes. Okay, and I'm anticipating that this is going to be a V-shaped reversal, the sudden drop, multiple touches of resistance over on the left. Okay, and as price is starting to approach this area, we call that our dead space area. All the orders have been filled in this range. And I'm going to anticipate if price enters that range, transparency, well, if that price enters that range, it should easily cut through it. Okay. Therefore, this is the reason why I'm still leaning towards the short side. Okay. Dropping down to the smaller time frame, if we are going to get any type of momentum type trading, we will use the fair value gap area. And right now we don't have anything even on a 5-minute chart describing a fair value gap. Okay, so we're still in the waiting mode. But the reaction from the PCE report, and there were not any other reports around it, was fairly lame. Okay, it's not as big as what we normally see. Okay, so that kind of threw up a red flag. Dow 30 stocks still trading on very light volume as we're about 20 minutes away from the market open. We do have more Dow stocks that are positive than negative. And let's just sort that. Come on. There we go. All right. So we do have 11 Dow stocks positive over 94 cents and one negative. So that gives us 10. 10 times 2 would be 20. Okay, so cash value equals 20 and futures are trading at 17. So cash and futures are balanced at this point. Okay. Remember, zone entries only. Okay. Inside days are choppy and designed to take your money. Okay. So don't get overly anxious. Don't let the news manipulate you. Just watch what's going on the chart here. Okay. NASDAQ as well. Inside day. Zone entries only. Okay. As price starts to come back down, we're expecting the gap fill a high percentage of the time on an inside day. Okay. The area of interest where I'm looking to go long is going to be down below. Okay. Now that doesn't imply that market's going to go straight down. Okay. But it does help me plan that direction. Supply zones and demand zones only on an inside day. Once we're outside of that, then we can take breakout trades again. The NASDAQ also likes to retrace back to the 20 moving average, and we also have the 50 over here. We have achieved a pretty good distance away from the 50 moving average, and now looking for that reversion back to the mean. Okay. And if you take the distance and find the average distance that price moves away, like the last 3 times price moved away from the 50 moving average and came back down, you will start to discover that there's that memory that traders have about that level. Okay. And how far price, they just start getting a feeling, hey, market's gone up pretty good. I'm waiting for a correction. Okay. Well, what makes them feel that? Basically patterns. Looking for a first bounce on the NQ back down to 24,338. Also notice that the daily chart, we're an inside day. Inside days can be choppy at the start. Often on inside days, price reverts back to the gap, or the 5 p.m. gap, 85, 90% of the time. And no breakout trades until we get that, okay? Dow. Dow is also an inside day, okay? And we got our prep screen zones on the outsides of this. So I don't have a really clear picture on what I want to do with the Dow just yet. And if we don't have a clear picture, then it's a good time to wait. Okay. Now, if you are in the mindset and you don't have the information about the inside day, you might be looking at this 20-minute chart as a fair value gap where you see momentum to the upside. And there could be some traders looking to push this up from this level. Okay. Now, I don't see that we're in that momentum phase yet. Okay. And once we are, we'll be able to use that. Let's look at the 5-minute. Sorry, there was a lot to look at today and put together. So I have some of my smaller time frame charts that were I didn't get all of those set up. All right, keep in mind Dow, also a nice high tight base. You had that fair value gap right at this at 459, 432. Price has already tested it one time. Very often with the fair value gap, when you look at the move up or the move down, the fair value gap areas that are a little further away or at the beginning of the uptrend, beginning of the downtrend, are a higher probability. One of the ways that you can do this is just by boxing the swing up, okay? And looking for fair value gap trade, and I'm talking different strategy than supply and demand, because fair value gaps work best with momentum, not with correct reversals or demand or supply. Okay. So when using a fair value gap on the Dow, better opportunities are lower on the bottom half of what we call kind of like a box trade. Okay. All right. So nothing to do on the Dow at the moment. Okay, we got Russell. Okay, Russell is an inside day. Right now we have dead space right here, and I highlighted the area because this is where traders keep going back and forth. Okay, and the more times that traders go back and forth here, most orders get filled. Okay, where we look for demand zones is below what we call the dead space. Three touches of resistance, three touches of support, kind of put that boundary of where we see that traders were kind of talking together. Okay. Now, still keep in mind, Dow 30 stocks right now are still very, very light volume. Okay. Which brings in some added volatility around the session open. Okay. So we pay attention to those things as the markets do open. Um, if the volume is very light and there's a news or economic report coming out, we often get a little bit more volatility. Okay, we got Globex range on the crude oil. Okay, heating oil, let's just double check here. Heating oil, right in the fair value gap, hasn't broken the high or the low. So when we look at crude oil to see if we have a trade for a strategy, which we call the open range breakout, okay, 5-minute chart, we take a measurement of the Globex high to the Globex low. And if that range is within 50% or let's say 40 to 70% of the daily ATR, generally I shy away from taking the open range breakout trade because things just get a little choppy. If the Globex range is between 0 and 40%, that's what we call a narrow range. And a narrow range, we often see a trend on breakouts. Okay. Now, if it's a wide zone, 70% or greater Globex range compared to the daily ATR, we're looking for the bull trap or the bear trap. And that's that supply zone or demand zone above the Globex high or below the Globex low. Okay. So we're always getting some lessons when we're putting information together. Okay. Let's see. We did have a breakout on the daily chart on nat gas, and looks like price wants to come back down into that range to find some buyers. I think today is last trade date on nat gas, last trade date on platinum too. And take a look at platinum. Platinum has had a massive move up. Let's see, what did we put on there? Today platinum. Let me gonna go back through my notes here. Yeah, platinum futures had a 212-point move up. That's 15% move in the last 8 days. Okay. Parabolic. Okay, so we'll take a look at platinum. Now, also with the PCE report, we saw very little. Now we're starting to come in. Okay, we saw little action with gold futures, and generally gold futures um, will have a much bigger reaction off of that report. Okay. I also want to point out that this particular price pattern, you notice how we have a price, and then we have this move down. This particular price pattern at the top of a trend, okay, often starts inviting the short traders in, and then they get very bearish. But this particular pattern does have the characteristics of rallying from this level and taking out this range. Okay, so I'm watching the gold to start to continue to make a new high. I don't know if it's going to happen this session or what. We do have the looming what's coming out next week, next Tuesday, is whether we're going to have a government shutdown. Looks like there's a lot of politics going on and people positioning for um, current administration to kind of stand its ground. So we'll see how that plays out. It's just going to be more drama. We've also seen some more political things with indictments going out, and there's a lot of distractions in the market. IWM, as far as the exchange traded fund, looking for demand below the debt base. Also, diamonds looking down below for demand. Now, we could bounce off of support. Okay, that's always, 3 out of 4 times that'll happen. 78% of the time to be exact. Price will bounce off support or resistance before going through it. So demand zones are further away, and that might be discouraging you from, trying to plan a trade. Okay. Because you're going, well, demand's down here. I don't know what's going on. I'm not in a position to. Now, keep in mind, demand zones and supply zones are created well in advance. Okay. And then when price retests them, that's when we have the trade opportunity. Okay. Now, demand zones and supply zones also have to be created. Okay. So it's possible that through today's session, because the kind of not so exciting um, reaction to the PCE numbers, we might have some reaction to the Fed and so on, that this time, because we had a big impulse move yesterday from the high of the session to the low, is we have to anticipate that today's session may be a little more on the choppy side. Okay. Now we already have some early indication of being in that trade range today. Okay. By having an inside day. That's a characteristic. Okay. We had an impulse move yesterday and we went into correction. So using the prior session's range to anticipate the next session, even though you might get some swings out of that range there, very often we're in a corrective phase after an impulse. So I size my position smaller. I look for basically smaller trades, smaller profits. I don't get really bearish or bullish, okay, until the evidence provides itself. All right, so we got one down stock negative, which is Apple, okay, and we got 10 positive. Okay, cash and futures are balanced at this point, okay. Inside day, we have inside day rules, no breakout trades. We expect a gap fill. We also see the better trading opportunities for long or short happen around 10:30, 11 a.m. Eastern, okay, after the institutions complete their order flow, okay. And let's look around here. Copper making a move back down. We do have a place we want to take a long about 4.6817. That's a fair value gap play. The demand zone that was used down here, nice little area where we had the dead space and then we had the demand zone just slightly below it. The next one is much, much lower. Let's come over to our picks. All right, we're starting to see a little weakness on the US dollar. Okay. We got the high tide base, US dollar, 10-year and 2-year yield, all kind of basing at the high. Okay. Now this could be a rally base drop, kind of giving that little Bart Simpson haircut. We saw that pattern earlier this week, didn't we? Okay. We saw that U-shaped pattern. Let's bring it over here to the equity indexes. Let's use NASDAQ as an example. Okay. So we're seeing the same pattern on the 10-year and the 2-year yield where we had price run up and basing sideways. Okay. This can bring, say, oh, that looks like a head and shoulders pattern. Okay. Look, these are just patterns that often come into play when we are at market tops. Okay. So we have a basic shape here, rally, the base, and a drop. So we have the initial drop out of that base. and then it bases and we have the bigger drop. Okay, so when we come back over to where were we at here? Oh man. I was going strong on that. What pat chart? Well, I'm gonna have to move on. I'm just, where did that picture go? Yeah, here we have one of those pictures here, and this is on Ethereum iShares. Okay, got the drop, the base drop. All right, I'll come back to that picture in just a moment once I find it. Okay, so, oh, I know what it was. Wasn't on there. It was over here. Okay, on the yields. Okay, so that picture rallied in the base, kind of watching to see what price does in this range. Okay, if we're looking at the 10 and the 2-year yield to pull back and the US dollar pulls back, that's going to light up the FX futures. Okay. Right now it's holding, and we could make another pop to the upside, which would be good because then we would see the yen popping into demand, the British pound coming down to demand, Aussie dollar coming to demand, and we already have the Canadian dollars there a little bit early. Okay, so we're waiting, and then we also have like a bear flag on a Swiss franc. Okay, so monitoring the US dollar, monitoring the 10 and the 2-year yield are also of key importance right now. Okay, before you start taking any trades on the FX products. Okay, we're also looking for some lead indications from what the direction of the market may be doing. Okay, the 5, 10, and 30-year bond notes, okay, are still looking to move lower. Okay. Now, the last few days, bonds, notes um, have been a little more correlated with the equity indexes. Okay. Now, you'll see that there's phases where they're correlated and when they're inverse correlated. Okay. Good market conditions, bad market conditions, so on. Okay. Um, and also, on the equity indexes, demand is much lower. So that's why I don't have a lot of demand zones on here. All right, short term, we still have the S&P. Okay. I'm looking for a place to add on to this. And I just don't have a lot of information right now to jump in. I have a direction that I'm intending price to go, but I don't have a way to apply a trade. Okay. Now, just to preface that a little bit, many traders, many people out there that are influencers and stuff like that, oh, trading's easy. Okay. The concepts, yes, are easy. How do we find a dead space? Well, resistance support. Okay. The concept of a fair value gap, 3 candle pattern, yada, yada, yada. The concepts are easy to understand, but the application of entering the trade based off of that concept and then trade management are what people struggle with. Okay. And uh, overall, 2 out of 3 things does not make trading easy. Okay, there's a lot of little lessons you must learn about this. My experience and what we put out here helps me and our pre-market routine. The information that we gather ahead, we watch the news, economic events, we got our zones, and we do have some new supply zones on the Dow, Russell, and NASDAQ. I didn't have a really good qualified one on the S&P yet. But the information that we collect and we put out each morning in our pre-market tips, very important part of our pre-market routine. What are we checking? Okay, what are we looking at? And these are the things that I'm going over now, okay? Often traders want to know the reason why to get into trade. They want to know how you apply it by entering the trade and how do we stay in the trade for a decent amount of time, okay? How do we anticipate whether we have obstacles in the way or whether we have smooth sailing, okay? Let's take a look at our indexes together. We got Russell, we got the little fake out breakout off of the economic report. But look how small these candles are as it drips down, okay? See, things that we notice pick up, we have supply levels up above, demand levels below, and we're kind of in between things. Now, that's not what people or traders were expecting this morning. But yesterday's price range, an impulse wave, alerted us that these conditions may be a little more choppy this morning. One of our first indications of the choppy market conditions and being a little more conservative on our approach and how we get into trades, okay, is when we start off our prep, looking at our charts, is the index inside or outside the prior session's range? Was the prior session's range an impulse move? How do we qualify an impulse move? You take the distance from the high to the low, and you compare that distance to, excuse me, the daily ATR. Daily ATR is 52 points on the S&P. That's the last 14 sessions average trade range. Yesterday's session was 82 points. 82 points is greater than the daily ATR. Okay. Therefore, we are expecting that. Okay. We're coming down to get the gap fill. Let's see. Do we have any zone entries down here? Yeah. No entries inside that dead space. Your entry needs to be below that dead space. Okay. And you would be looking for a bounce probably near this level. Okay. Now, this may not be what you want to hear. Okay. And you can see that price is starting to accelerate into that range. Let's open this up. The fair value gap is now setting up. Okay. We're getting a nice move. Okay. But price still needs to retrace back up to 66.74 in order to get an entry. Now, it's possible we keep making fair value gaps, but our trade is, if we're going to go short, 66.74 and a quarter would be that area, okay? And there are no other fair value gaps there, okay? We do anticipate price to go through the dead space, and we expect our demand zone to be much lower. We also are looking for the gap fill. I use the 5 p.m. close. Other traders might like to use something different. That's perfectly fine. Document it and verify it. So we're still expecting that gap fill. Price is bouncing up. Stocks are holding on lighter volume. So your first trade opportunity, let's just close this trade out. Okay, I'm going to turn off the video because my screens are freezing up here.
Order filled.
Okay. So price went right back through that area. That's off the table. We just have to wait for the next potential trade setup. Okay. One Dow stock down, and we have 12 up. That's 11 times 2 would be 22. Cash and futures are balanced.
Order canceled.
Okay. A little choppy at the open. Expected that on an inside day. Okay. You might be able to use that 6690 area as another test. There is a fair value gap inside of that, and that's what I'm going to target. Okay. Yeah, let's set this up. This will be nice. Okay, so 6692 quarter. I'm going to come in just slightly before that. Okay, which will be about 6691 3/4. Okay. 91 3/4. That's where I'm going to sell short. My stop loss will go up to 97. And we'll kind of target that range right there. Now, on inside days, price inside current price, inside the prior session's range. Okay. We look for zone entries only. We anticipate a gap fill. The better trades often happen later in the session between 10:30, 11 a.m. Eastern. Okay, so if you're looking for that perfect type trade, waiting a little longer may prove to be a better opportunity there. Okay. NASDAQ already filled the gap. Notice how the price went right through that area.
Order filled.
Need it when this computer kind of slowed down here. There is no more, there's no fair value gap inside this one, so I'm gonna have to look at the smaller time frame. Yeah, we got the leg base up here. $681. I'm gonna still lean towards the bearish side of that. 24,682. Okay. Dow.
Order filled.
Poppy and Q came back to us already. Okay, let me get my protective stop loss in place. 24,708. S&P. Yeah, we're just looking for that. Let's take a look at our our 3-minute chart here. And what I use this range for is whether we're in momentum, do we have a fair value gap type trade, and so on. On the S&P, this order I placed right here is from the 20-minute chart. Okay. Large market cap stocks, let's see what they're doing. A nice little bounce up on Amazon, 90-minute chart right into the zone. The other thing that I'll point out is on these large market cap weighted stocks is that their zones are far away for demand. We're in the middle of all of this. Refreshing a couple of these charts. Strange market behavior for such big numbers. We do have more. Let's see, the next thing, we're 20 minutes away from consumer sentiment. Baker Hughes, and then we have another Fed chairman coming out a little bit later. So the current market conditions, like an inside day, may be confusing some traders today. Okay. Should we go up? Should we go short? I mean, you guys experience some of the same things? Like something just doesn't feel right. Okay. Now, if you've taken a couple of trades already and had some small stops on it, inside days are a lot like this. Okay. When we use the equity indexes and we look at each one, we compare the prior session's range and whether it's inside or current price is inside or outside. If it has not broken, then it's often very choppy market conditions, difficult trading environment. Now, if you already know it's going to be a difficult trading environment, you may position a little bit differently. Size your position. I'm using 5 micros, maybe drop to 2, okay, or drop to 1. Zone entries only, we're still expecting that gap fill. So my target is still the gap fill, and that means price must come down to fill that gap. Okay. So that's why, and that's based off of information I've collected over the years. Okay. My own personal study, but I'm sharing it with you that inside days, often the gap fills very high percentage of the time. There are days where it doesn't. I get it. Okay. It's not 100%. But much of the time it does. And the more that you observe that, you say, okay, well, I do have a direction. Okay. Even though the chart doesn't look right, I still have to keep that as part of my analysis. Often the gap fills the same trading day. We also have other rules around the uh, inside day is we only take zone entries. We don't take breakout trades because they tend to be very volatile. Okay. But the Dow stocks are still holding their gains to the upside a little bit. And since futures follow the cash, we use the Dow 30 as an odds enhancer. Okay. The Dow index is the only price weighted index. Okay. S&P, NASDAQ, and the Russell are market capitalization weighted indexes. So when I'm watching the NASDAQ for trade opportunities, I am also monitoring the top large market cap stocks. Okay. And if all the large market cap stocks, if the 4 of them are up and 4 of them are down, then we know things are kind of mixed. Sideways market for the futures. Okay. If we have more that are up than more that are down, we anticipate a trend direction. A lot of volatility. Inside days. Darn it.
Order filled.
All right, S&P just got filled on the S&P. Okay. Price reacted up to the fair value gap. This was a place we had in mind. Our stop loss is in place using 66.97. Remember, taking a measurement of the cash market and comparing it to futures to see if futures are overbought or oversold relative to cash. Okay.
Order filled. Order working.
Gotta work on those sound things. All right, we're seeing the video pulling back just a little bit. Apple still holding. So we're inside days. We watch and monitor Apple, Nvidia. If they're both going the same direction, we have some good momentum. If they're inverse of each other, then things are still a little bit more on the choppy side. Again, inside day, we are expecting the gap fill. But we have to have a way to enter, apply a trade, manage risk. Okay, it's not just as simple as sell short because we're looking for the gap fill. No, you got to time it. Okay. And we're watching the stocks right over here on the Dow. Cisco and Nvidia are pretty far away from going negative over $1. Okay. And we're starting to get more Dow stocks that are more positive over $1, but still on the lighter side of the volume is way on the lighter side. Okay. So we're going to watch for some of these stocks to go back below $1 and some of these to start increasing. And then we're starting to see that the cash market and the futures are trying to balance out. Okay. Now, sometimes having a good understanding why will help you stay in the trade. Okay. That's why I'm taking the time to explain inside days, taking the time to show you the cash value. Futures only follow the cash, so it's important to monitor what the cash is. Okay. Cash means stocks, real product. Okay. Let's see if there's another way to get into this on a small time. Yeah, small 5-minute charts. We're just all over the place. Get my charts right. And we're expecting our first move back to the gap fill. Now, in this small time frame, 5-minute chart, I still have no place to enter. The 20-minute chart gave me that area to enter the trade. Okay. Inside days generally taking a smaller profit since the choppier market conditions. Okay.
Order working.
All right. Crude oil. Okay. Another valuable nugget that was put out there this morning. Okay, taking the Globex range. If you were looking for the strategy of the open range breakout on crude oil or natural gas, Okay, you need to know when it's best to trade crude oil and natural gas. We take a measurement of the Globex range, we compare it to the daily ATR. Okay, because not every day is a good day to take the open range breakout. A clue that we found is by measuring the Globex range, and if the Globex range is between Globex range is between about 40 and 70% of the daily ATR, it's more of a choppier open, so we don't go after the open range breakout trade. Okay. Natural gas. Oh yeah. All right. Natural gas just swept right through that dead space. Okay. And we're getting a bounce off of support. There's a small area right here at the origin of a strong move up just below that dead space. That'll be the first place we'll target for a bounce. Okay. When we go down to the lower levels, we have other places where we're looking for demand, and finding where we have the demand inside of a buy territory is where we'll look for the trend change versus just a bounce. Okay. All right. So now gas, I'm gonna look for an opportunity, take a trade long. $3.127. And then I'll make my stop loss at about 115. Okay. See, all the charts that I'm showing you, okay, and putting together are a result of what I've done in the pre-market routine. Okay. So it looks like we might get stopped out over there. We do have a consumer sentiment report coming out at 10 o'clock. That might have more of a catalyst or more of an effect on the market than some of the other Fed chairman and stuff like that. Don't know. All right. Still not much reaction on gold. No trade until we find price comes down to demand or yeah. Okay. Our ETFs are really kind of quiet. Going to revisit platinum. Platinum has just been on a ripping move to the upside. Some massive moves. But platinum, like silver, is a pretty big mover. Okay, let's take a quick look at silver. Woo! Almost, we've got a 14-year high on silver, and we're looking to take out a 15, 16-year high, which would be above 54. So we're getting a nice little pop on silver to the upside. Crude oil going a little deeper in the zone on a 20-minute chart. Impulse correction, impulse correction, impulse correction, impulse. Okay. What comes after an impulse? A correction. what is in front of an impulse? Correction. Copper making us move down. We got 4.6817. Our equity indexes, mainly the Dow, the Russell, and the S&P are showing the strongest move up, and NASDAQ's not. Okay. A little more weakness on the 5, 10, 30-year bonds and notes.
Order filled.
We just got our net gas entry. Stop losses in place, just below the distal. I believe, and I'm just going to go out here and verify it. I'm coming over here. We got the CMEgroup.com. And let's get nat gas on a November contract. And today is the last trade date for nat gas. Okay. Now we often see some pretty good characteristics around these commodities around last trade date. Last trade date is when anybody that's not wanting to take delivery must be out. By the end of the session today, okay, if you're still holding a nat gas future, because nat gas futures, when you look at the contract specs, it is a deliverable product. So on or just after the last trade date, we often see prices drop on natural gas, crude oil, and then we start to see a significant rally from this area. So it's worth the risk as price approaching demand, okay, to participate in possibly a move back up, okay? Might be just a small one today. So we got a few obstacles in the way. Well, these indexes are quite messy on a 5-minute chart. There's just not a lot of good trading opportunities here. And that's to be expected on an inside day. We often see that it's a little more difficult trading environment. I'm going to take a poke at we just came into a level on the Dow.
Order filled.
I'm going to take a shot at the Dow stop loss. 35. Bring it up a little bit further. We might have to take another poke at this. I'm a little bit early in front of the economic report. Russell's also overshot a little bit. The internals, well, we do have some buying coming in, but the markets have been moving higher. Okay. When the trend is high above 150 and 2, we want to see the markets dropping in order for seeing that they're buying into a downtrend. When we see them buying in and the markets are moving up, this is often what we refer to as a short squeeze. Okay. So using the trend, which was developed by Richard Arms, also referred to as the Arms Index. This is a measurement of the NYSE exchange, where they take the advancing volume over the declining volume, divide it into each other, and then they take the advancing issues over declining issues and divide it into it and give a reading on it. Okay. Trend high, markets dropping, trend high, time to buy. Trend low, below 60, and markets ascending, time to go. If the markets are dropping and the trend is low, okay, that's more of a kind of a liquidity drop, okay, where you're looking for some demand zones, okay. It's good indications, kind of looking around. I call it my dashboard. These are some internal measurements. We look and see whether we have more upticks and over downticks. We look to see how the VIX is performing. Right now, the VIX pulling back. Markets are getting more complacent. Is that all we have? It's just net gas and taking some heat on the Dow.
Order filled.
Not anymore. All right, let's drop down and see what we got going over here. Well, something's about to happen. Look at that volatility. Let's get back out to our larger time frames. Yeah, I'm just kind of waiting at the moment. NASDAQ is the one that's off a little bit today. All right, here we go. Russell coming back down.
Order filled. Order working.
That's going to drive me nuts. wait for a setup here. We have a direction, but now I need to apply the trade for that direction. And all we're in is our little net gas.
Stop field. Order working.
The time-based charts are taking a while to set up. All right, so let's keep working on this. Hi, Gingy. Sorry, I didn't see your question there. Could you see the picture on the active income Discord? Okay. Yeah, you can post it in here too if you want. Oh, Chris is there. Active income chat. Yeah, I can see how both of those can work. Nice job, Jens. Okay, now we're getting somewhere here. Now my screens are frozen up a little bit here. Here we go. Beautiful. And my screens are freezing up here. Let me stop sharing for a moment. Let things catch up. Hey, Ken, let's see. Ken says, do you think of the VWAP indicator intraday? Yeah, it's always a reference point. Uh, the one thing that you can use that's going to help you most with that narrow range inside day type trading is knowing what the prior session produced. Okay, whether the prior session was an impulse day or um, a correction day. Okay, now I'm utilizing, because I'm anticipating there's going to be momentum, so I'm using the fair value gap now as a way to enter the trade. That means when price retraces back up 66.88, that's where we'll look to take the trade short. We, and we got about another 2 minutes in that. Now remember, what we started off with today was recognizing we're an inside day, and we recognize that things could be a little choppy, and we also recognize that we look for the gap fill. And hopefully we'll see some momentum. Once we start getting into the dead space again, momentum should be pretty quick to the downside. All right, 5-minute charts are setting up. Our gap fill is about 6661 area on the S&P. I think I got all of those, right? Yeah, Harvey posted 2 comments from Ken, which we got. Okay. And I did just look at Gen Z's. Okay, I think I got them all. If you see one that I didn't get, just let me know. Looking for the gap fill on the S&P. We now have the Apple and Nvidia going in the same direction. Number of Dow stocks negative, we have 3, and we have 11 positive, leaves us 8 times 2. Cash and futures are balanced again, okay? Better trade entry opportunities are when futures are oversold or overbought relative to the cash market. Being that the cash market and futures are balanced, it makes it a little more challenging to get an entry. So we might be waiting for price to come down to demand before having, or come to demand, futures being oversold relative to cash, and then looking for that move back up. Okay, good. Now we might have an opportunity to splice into this. Okay, so we have defined the fair value gap. And we'll be looking for that opportunity to sell short 66.80, and the stop loss will be 66.88. I'm keeping really small contract size on this right now. Let's get this one over here as well. $6.36. Okay, watch the dead space. Watch how price goes through that area very quickly. And then the areas below the dead space is where you're going to look for your long opportunity. Man, what happened to the time? We're burning fast. Come on, S&P, let's get down and fill the gap. Dow, what a nice move on the Dow. Still looking for the gap fill on the Dow. And we also have a fair value gap right in the middle of it. Russell already has filled the gap. So price coming back into that dead space area, we'll look for demand much lower. Yeah, look at price just going right through that dead space. Demand is much lower. S&P. Almost got the gap fill. Now I was unable to apply a trade. Okay. And there's no trade entry in the dead space to capture that bounce. I'm gonna have to wait now for demand on that 6634 area. Stocks often play out really nice with these areas too. Now we have really strong support on the NQ and potentially a breakout. If we don't get the fair value gap entry, we'll look for a breakout below support. So I'm starting off with a couple of micros. I'm looking for a bounce up to find some sellers, but I'm also going to prepare to take a breakout trade to the downside. Okay. We have this trade is already set up. Now I'm setting up the breakdown 24,578. target, 24,530. S&P has more profit margin potential, but I don't have a breakout trade. Breakout trades are going to be more elevated risk. Woohoo! Anybody get the nat gas? No, Miss Fay did. Did you get that one, Miss Fay? Golly. Golly missed it. Oh, bummer. Wow, nice move off of crude oil. Something happened? There any news out there? Ooh, yeah. Netanyahu's having some challenges now. Everybody got up and walked out on his United Nations speech. That's got to be like a little black eye, huh? That'd be like teaching a class, and as soon as you start, everybody walks out. That would you get the day off, but it's not a good sign. Oh, you took it short? Nice. We have to introduce you to that reverse button. All right, keep in mind the better trade opportunities are going to happen a little later in the session after 10:30 Eastern. Okay. On inside days, which is what we started off with today, price on each one of the equity index futures were trading inside the prior session's range. That usually leads to some more choppier market conditions until they break outside of that range. The prior session was an impulse price move. Okay. And with the impulse price move, we generally go into correction. Now, corrections can be wide and they can be narrow, but they're mostly in a corrective phase. Okay. Well, I'm not using Fibonacci levels. I'm using the Fibonacci tool because it draws two lines. Okay. So when I plot those lines, my support or resistance, I use that Fibonacci tool and I'm using 0 and 100 because it draws two lines and gives me the numbers. Okay. Thanks for putting that out there for me, Harvey. All right, we're approaching the breakout trade on the NQ. We've got 8 minutes to the bottom of the hour. Once the NQ breaks that support, I'm going to come back in and place a protective stop right about that 607. And we're going to hope the S&P joins in the move to that downside. But I don't have an entry on the S&P yet. Okay. So we're getting close to the breakout on. Now it's going to be a little more elevated risk and maybe a little bit more faster tempo for a breakout trade. More elevated risk because we are an inside day. 609. And I'm not sure, did that answer your question, Ken? Just want to make sure that. I may have, I'm not sure in what context that was. All right, here comes the NQ. We got about 6 minutes to the bottom of the hour, so this trade may only be about 6 minutes till we get to the bottom of the hour there. Here we go. S&P is about ready to break support below 66.56. Here we go, here we go, here we go. All right, so once we get about the 24,530, 520, I'll be looking to take a short-term profit on that. Look at the volume. There's nobody here. The prices are dropping to find demand. Yeah, Ken, if you find something, please just come in the Discord room or send us an email at admin@the market institution, and we'll happily take care of you. All right. I want to see how price intersects with that. We got 4 more minutes. Need S&P to break now. 3 out of 4 times, or 78% of the time, price is going to bounce off support before breaking it. All right. Now, I'm not ready to go long, but I am getting ready to take a profit on this. Giving it just a couple more minutes because we're looking at the bottom of the hour. S&P will probably get a bounce around that 66.57 before breaking support. Excuse me.
Order fill.
Okay, took the trade off. And we have now potentially a new fair value gap that's gonna, so if we do get the break, we'll be able to come back up to about 66.60 and look for the entry to jump into that trend.
Order cancelled.
Order filled too. That was a nice trade on the S&P. All right. 78% of the time, price will bounce off of support or resistance. Okay, so that bounce, we still got about 2 minutes left in that candle. Once that candle completes, we will then have that fair value range. And don't get too jiggy here about taking the breakout trade. Breakout trades are often a little more risk. We're getting a nice little, at least there are some buy orders right here, which was going to imply the bounce. Okay. And we're potentially creating another fair value. Okay, so once this candle is complete, we will have the range for the fair value gap. And then we'll wait for, once price move, retest that area, then we'll look to take a trade short. Right now, we're still about 1 minute to get that candle complete, so we have the right range. Looks like we're approaching a fair value gap on the nat gas. Now, what you should be, if you're new and watching what we're doing, okay, you should be saying, wow, that was a great entry. But if you're not familiar with what we do here, you should be going, well, what was the information on the left-hand side of the chart? What was in front of that? Okay, so we had the dead space and we had the zone just below the dead space. Very key indication. This is the origin where we have some potential unfilled orders. If you want to learn more about the methodology and the approach that what we do here at TMI, get involved. We have Mastering the Charts Part 1 and Mastering the Charts Part 2. Okay, they give Mastering the Charts Part 2 is a little deeper dive once you get comfortable with understanding all the dynamics around what we are sharing over here. Okay. So the lines are not just a random place on the price chart. Okay. They're very specific places we're looking for. All right, we're just about ready to wrap up our session. Nice bounce off of that fair value gap on the NQ. Let's get rid of that one. We got the one down below now. And I just missed my trade on the S&P. If I decide to take the trade here on the S&P right now, it'll be around that 6,066. Maybe, and then I have to use the 6,070, 670 as my stop loss. Okay. You might be able to take the breakout trade now. The price has bounced off of the support, and we're looking for buyers. Again, demand zones down below. Okay. So I'm going to wrap up our session. This is our live trading room. Fridays we do a live stream. So happy everybody was here. Look at there's the volume weighted average price on nat gas. That'll be kind of that immediate target unless I have something else right in front of it, which I do. I have that 618. Yeah, so we're right there getting close. Now we know there's going to be a lot more sellers up around the volume weighted average price level. And that was one of the questions that was asked, do you use it? Yeah, when we're extreme moves down, and an extreme move, you could be using Keltner channels, you could be using Bollinger Bands, and so on. Okay. So I'm about ready to pop this one out. It was a nice little trade setup. Yep, let's get that over there. And I'm gonna close the trade. Let's take a profit.
Order filled.
And another Friday happy dance. And we'll look, now I'm just gonna have to wait for price to come down to demand on some of the equity indexes here. All right, I'll be over in the Discord room if you want access to our Discord room. I'll post it in the chat. Come and join us. Look for the voice channel at the bottom of the community room choices. And I'll be hanging out in there, waiting for y'all. We'll see how the rest of the day sets up and we'll do some trading in there. So everybody have a wonderful weekend. Everybody have a good, happy Friday. And appreciate all of you for coming in. And we'll see you next Friday if you're coming into the live stream. And thanks for all the questions too. Wow, nice job, Candlestick. You got that made 1.3K. Locked out. Nice job. All right, have a good day, everybody.